Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to just go over the bright green on the crypto charts here, but just going to jump over to Bitcoin really quickly because this is a very important week where something decisive will happen. And you can see in 30 seconds, the 12-hour chart is going to close, and we are going to see if it closes above the alpha momentum pool for the 12-hour chart. And if it does, it will retain some chance for bullishness, especially being above that 12-hour volatility pivot upon this close. And that will give a little bit of a boost to the daily. And we can see the 12-hour is closing right now above my alpha momentum pool. And so that does give it the best shot that it has in terms of a momentum analysis. In order to try to hold this level and perhaps even pump to another level in the next 12 hours. So what happens in the next 12 hours? Well, actually, we're going to have a daily closing, right? And that daily closing is super important because this is coming off of a huge drive up where basically all of our indicators are super overextended, super overheated. And you can see we aren't just crashing after that 12-hour close. We are holding pretty consistent. And I do have the EMAs up just to show you that we're not only above the 9, but we're also above the 4 EMA on the 12. So this is an extremely bullish posture for the time being. And in fact, it's very comparable to this pop up here, this pop up here, right? So guys, don't fade the posture on the chart right now on this 12-hour. We are going to just jump over to the daily chart because, of course, the daily is the next super critical increment that we should be looking at. And one thing that we want to notice just right away is that the daily also is holding very strong above its current momentum. Okay, so I do have the new day's momentum pool drawn out here, and what does that mean? Well, if we're on top of the momentum pool, of course we're retaining all of that momentum that we've just built up from the bottom, and if we're underneath the momentum pool, it means that we're losing that momentum, especially if we're under this general daily continuation. Now, it doesn't mean that we're going to necessarily play down to our lows or anything, but it does suggest that maybe we would go into a bigger consolidation period, right? And so, of course, we do have 12 hours left on this daily chart, which means that we can either hang out here, which at least on the Coinbase chart is right on top of that daily 200 EMA. So it did take a lot of effort to just push through this thing, and we are getting hung up on it. And so it's not that easy to actually just to fall back down. And plus we have the 200 simple moving average down here at 19,500, and that is converging with the 10 simple moving average as well. So we've got a lot of support in this $19,500 area. Plus, you're going to have your 21 EMA popping up here sooner or later in the next couple days. And so if we do start to fall back down, again, we're going to, even if we tag all the way down to the 21, we're going to have a lot of support. So this is today's close. And again, I want to see us on top of the momentum pool. I want to see us above 21,188. Currently, we are doing that. The volatility pivot is at 21,105. What does the volatility pivot mean? That means that gives us the best chance to pop off, if we are going to have another pop up, right? And what do we have overhead? Well, you guys can see that we do have the 300 EMA and the 300 SMA, both darting down overhead right about this $24,000 area. So, hey, could we get a pop up all the way to 23,500, 24,000? That would be really possible, assuming that we can just retain all of our bullish momentum on the daily. And should we have some type of a volatility pivot, which pivots, a bias in the direction of the upside, assuming that we hold on to this 21,105 level. Going to show you what that could look like on our BBWP. You do see that the BBWP, basically the volatility, a tool that I'm using here, which I did learn from, a Crown's Crypto Cave. It is coming to a close. It is starting to pinch off. Okay, this epoch of running up, this volatility explosion that we had, essentially is coming to a close. And yes, we can squeak a little bit more out of it, and that's what the chart is telling me. Okay, so it hasn't closed yet. Today, if we do lose our momentum, probably this thing will pinch shut. If we maintain the momentum, then maybe we can squeeze out another day or two, who knows. But this is starting to get in that kind of toppy area where you do see it's above the 90% mark, and that is where often these things do close, if not at the 80%. So guys, again, I'm looking for our volatility to perhaps squeak out just a little bit more. Maybe we could get one more pop depending how we close today. But if we jump over to the stochastic, you can see that the stochastic is also burnt out. Also, the volatility on the stochastic. So, assuming that we do flip to the downside, which currently we're still upward postured. Even though we're extremely overheated, we're upward postured, and you can see the volatility can expand even a little bit more on the stochastic. So again, like we may have another day or two of bullishness before this chart really has to make a decision. And even then, you can see sometimes we dip down and then we have one final thrust, and then it's overboard, right? So again, guys, don't fade the rip on what's happening with Bitcoin. We just don't know how this is exactly going to pan out. If we look at the daily RSI, you can see that we are well into the bullish control zone. In fact, we're making a new zone above the bullish control zone, just like God mode, right? Where we are, still upward postured. The day could close with a little bit of bearish divergence or something on this little toppiness here, but and we are far away from the EMA. But even if we came back to the EMA on the RSI daily, you can see we'd still be in the bullish control zone. So, I mean, we would really have to break down in order to have a total breakdown. And we have this kind of area around this 60% where you can see we get hung up often. If we did come down, maybe that would act a little bit as support. And, it's just, we don't really have, anything that would tell us that, we're likely to break down into a bearish control zone anytime soon. So maybe just sideways and up, like it looks pretty good to me, guys. A lot of people I know are getting ready to short. And you can see on the daily Joule that, it's not necessarily the worst idea, but and we are quite overheated on many metrics, but that doesn't mean that it has to happen right now. We can often hang out in these bullish kind of, quote unquote, oversold areas in an uptrend, because you can't really be oversold in an uptrend. You can just continue to, pardon me, overbought or whatever. I'm just mixing this up right now. But you can't really get, too bearish when you're in a bullish trend, right? So you guys have to understand that. If we do have a pullback that starts to break structure, that's when we should get concerned. We don't need to be concerned just because, we're, quote unquote, overbought, right? Um, you can just hang out there for a long time, guys. So how long was this one, right? Hanging out up here, right? So this was 12.4 all the way until 12.17, okay? So, you could get like 2 weeks, a 2 week span in this kind of overbought zone, and there's nothing too wrong with that. One thing that would kind of give me an indication that maybe we'll have a pullback sooner than later is the ADX is also maxing out, and the ADX doesn't tend to hang out in these areas for too long. So it does tend to turn around quite quickly and show that our intensity is dropping off fast. And we do see a curvature on the ADX. And so this would be probably be my biggest heads up that, maybe we are ready for some type of a pullback sooner than later, as well as the indication on the jewel here. But guys, I don't want to spend too much time there because, again, like I'm a momentum trader. We can understand that the volatility has not pinched off, so we're not ready to necessarily consolidate yet, which does suggest that we could have at least one more volatility push to the upside. And if we hold this current momentum again above 21,188 on the daily at the close of the day in about 12 hours, then we do have a chance for one more pop up, perhaps to that $23,000 area. If I do jump over to the weekly, you can see that our EMAs, in that neighborhood are going to be the 35 EMA here. So the 35 could start to just offer a little bit of resistance around that $22,300 area, which would go along with a little bit of the liquidity over here, and the top of this kind of, just kind of toppiness area over here. So that could also be a little bit of a hang up spot if we were to have another pump. Otherwise, I would see the majority of people would probably be targeting 25,000, just because look at all these EMA crosses that are going on up here. You got the 200 weekly EMA, you've got the 200 weekly SMA, you've got the 50 EMA, right? And then you also have the 50 SMA bearing down. So all of those are very important EMAs to traders. Almost everyone uses those EMAs. And so the fact that they're converging at this one spot, that does suggest that that would be a good spot for us to reject if we just happen to blow through the 35 weekly EMA. And guys, that's possible because not that many people use the 35, to be honest, but almost everybody uses the 50 and the 200s over here. So we are going to be looking for that. If we do just kind of zoom out a little bit and just assume that we are operating on a kind of like a weekly basis, maybe even a 2-week basis, then we could understand that even if we get another pop, probably we are due for a pullback at some point. We've got this huge, naked candle exposure over here, and where would we kind of critically start breaking things? Well, in the middle of that candle. So I would probably say under 19,000, I would probably get pretty concerned. And then really, we don't want to lose the 21 EMA here, which is quite bullish. So 19,000, 500-ish, just take the low on that EMA. So 19,300 is going to be somewhere where we're going to stay above the 9 EMA and still have the 21 EMA in a bullish posture. And so I would say 19,300 is really the level that I don't want to lose on a weekly basis if we should end up trying to reclaim this candle here that, just that massive weekly candle that just pumped us up to heaven. Guys, you can see that we do have the 4 EMA following us quite tightly up. And again, getting underneath 19,500, 19,300 for too long could put us in a negative squeeze with the 4 EMA and the 9 EMA, which then could have us retest our lows. And so we don't want to hang out too low there. Plus, you can see that we have the 300 simple moving average just cutting through that area of 18,500, and it took a lot of work to break through that. So you don't want to go under 18,500 at any cost. But look at what's happening right here. We have the 300 EMA, right? And I just want to double check my settings to make sure I'm saying that correctly. Yeah, we do. We have the 300 EMA um, basically directly under us right now. We're sitting on top of the 300 weekly EMA. And so, that's where we got a super hard rejection right here. Look at this perfect rejection off the 300 EMA back here in November. But look what we did. We recovered the 300 EMA on the weekly, and now we're sitting on top of it. and potentially even getting into some bullish potential squeezes to the upside with these other EMAs that are starting to curve, guys. So, a few months ago, I was telling you that probably, just Bitcoin traders' obsession with the 200 EMA needs to just be thrown away. Okay, the chart is now operating on the 300 EMA and the 300 SMA. So that's where professional traders are trading often to find a really deep value. And several episodes a while back, I was suggesting that maybe we would retrace all the way down to the 300 simple moving average, and maybe that would be it. And it looks sort of like that's what we did. Look at this perfect retest of the 300 simple right here, right? So we not only broke down from the 300 EMA, but after breaking down, we actually attempted to grab the 300 simple moving average. So I think, and then look at this price action right under the 300, okay? Coiling around the 300 here. Guys, I think we're operating on this 300 EMA structure, and as long as we hold this zone above, 18,700, and as long as we quickly pop back above 20,700, and just taking the average of the two, not losing that 19,500, $19,300 level for too long, then these are going to continue to be bullishly postured together, and you can see that price action is effectively squeezing up through this, and the fact that we're above both of them is quite bullish in my mind. Okay, guys. So what do we have going against us on our EMAs using EMA theory? Well, let's just double check. Let's see if there's anything on the monthly. On the monthly, you do see that we do have, just right off the bat, I can see, what do we call this, Alpha Fam? We call this the Alpha 9 knockout. Why? Because we have the 9 SMA and the 9 EMA, even though, this could be considered, them attempting to cross bullishly or something, right? Um, in fact, this could have the potential to push us down a bit. So it's not surprising that we would have a pullback in this region. Again, this is the monthly, so take that with a grain of salt. We still have half a month to go. Um, and if we should get above 23,000, these would not cross on the monthly. Okay, so we wouldn't, you know, what am I trying to say here? By the close of the month, we could have something bearish just attack us, and that could be actually correlated with Jerome Powell's meeting on February first, where he'll tell the new interest rates. And so, should we be above 23,000, 300-ish at the time of Jerome Powell's speech in February after the close of this, then I would suggest that we're probably more bullishly postured than bearishly postured. But if we are underneath it, they are going to have the ability to cross, and that would be an Alpha 9 knockout, which then could take us back even to the bottom of this range or even lower. Okay, so let's keep that on our radar, Alpha Fam, okay? Because that one's going to be significant. And we also can see that they have the 50 simple moving average there, which, I mean, that's not something that's impossible to break or anything like that, but, it is right there, which we could also bump our heads on, right? Like at that 23,000-ish level. And then we have all these other ones through that 25,000 dollar area. But if we do get a positive squeeze on this, we could just squeeze one, through one and another, over the coming months, and this could be kind of an epic squeeze, to be honest. Um, it's not all bullishly postured right now, but they are getting positioned, and the 4 EMA is really telling us that the 4 SMA and the 4 EMA are really telling us that they're ready, like they're thinking about it. It could take a month or two, right? We'll find out, depending on how hard this thing pushes up, or if it just gets, knocked on its butt, guys. So let's go ahead and let's just go back in time and see maybe what things looked like back here on the monthly. Did we have something similar when the yeah, so we can see a momentum shift in the 4 EMA over here, and then the 4 SMA right over here. And we did have overhead resistance of the 35, but look, we just basically squeezed right through it, and it took a couple months. It took 3 months, but look at this epic run over those next 3 months. So could we get some type of epic run over the next 3 months? Well, I think it's possible, Alpha Fan. I think it's possible, okay? It really started to happen right after that momentum change on the monthly. So, can I be bearish right now? Yes, there's many things to be bearish about, but can I be a perma bear about it? No. And have I been bullish since the bottom of the market? Yes, I have. For the first time in basically a year, I've been bullish, and so I am going to continue that optimism to the upside. And I would suggest that it's probably not a good idea to be shorting, when Bitcoin is having short squeezes, when Bitcoin is in a bullish posture, when we're potentially in an uptrend, because you may end up getting wrecked on that. And this thing doesn't always stop to check back when Bitcoin does get a squeeze. Sometimes it just keeps going, okay? It kind of melts faces. And people are going to say, well, Bitcoin's not really in an uptrend. Look, we've just basically made a hypothetical double top right here, which in my mind, that doesn't really pass the smell test. Number one, we're sitting above the 200 EMA. I think that's a lot of bears are trying to find an excuse. And number two, let's pop over to the CME chart. And remember that CME gap that we had? And I was just wondering, are we going to fill the CME gap, come back to fill that CME gap? Well, I think maybe we do. I mean, it could be just a bait for when we come back down later to fill that, okay? But which would be right at the 20K. That would be perfect support to come back to. Like, let's say that we have an epic run, okay? And then we come back to find support. Where could we find support? Right on that CME gap. So we don't actually have to come back and fill that this time, guys. Okay. So I'm seeing a lot of YouTubers, a lot of Twitter people, who are a little bit more sophisticated in their techniques saying, well, maybe we're going to fill the CME gap, so I'm going to short right now. Or, you know, uh, we've been too bullish, so I'm going to short right now. Like, why are you going to short into bullishness? Okay. The more concerning thing for me is that we have this kind of like alpha 9 knockout with these 200 EMAs on the daily. I don't know how significant that is. Usually, the higher up you get on your EMAs, the less important that is. And so I don't know exactly the strength of this one, because Bitcoin has rarely been postured this way, or maybe never has been postured this way with the 200s before. And so um, I don't have any analysis based on that. But that would be reason for a hiccup. That would be a reason for a slowdown in this area, or maybe even a slight dive to fill in that CME gap. But do I think that we have to? No. And by the way, what was the point that I brought us over to this CME chart for? We have a higher high. This is a high right here. We have a higher high than this one. And so it's different than the 24/7 exchange. On the CME chart, we have a higher high. So we have a higher low and we have a higher high. Okay, so what is this? This is an uptrend. Why would you be shorting in an uptrend? I mean, this is a baby uptrend, right? But it's a hugely, momentum-driven one, which again, we have this cross on the 200s up here at this $23,000 level. So again, everyone's targeting that $25,000 area, which I would consider this a big zone of resistance, even on the CME chart. But you can see we also have this wick over here, right? We have this kind of like the headiness of these candles over here. So yeah, I mean, that could be a resistant area. We also have this wick right here around 25,000 and these EMAs up here. So yeah, I do think we're coming into resistance, but do I think that we have to stop right now? No, I just think we're getting into the grind, right? We're getting into the chop, whereas this was a smooth pump off of the reclaiming of this candle. Now we're getting into the grind of all this choppiness. And so just be careful. We might not come back as far as people think that we should. One reason that we could do that is that we do have the kind of 89 and 100 EMAs down here, and if we do just come back down there, what would that be above? 19,300. So that would be within the safety tolerance of the 24/7 exchanges as well. So we've previously been rejected by the 89 almost all the way down this, this massive downtrend, right? And so if we were able to just come up here and retest it, we failed up here in, March to April in 2022. Are we going to fail again? And is that what everyone's going to be freaking out about and shorting, if we break through these levels? Well, probably. I think if we lose 19,000, that's going to be pretty scary. We do have this diagonal right here that we could just retest and this kind of wick off of that. So if we do get a deep retracement, I wouldn't want to hang out below these levels too long. It's very difficult for Bitcoin to get above these daily 89s. So the fact that we're above that, we want to hang on to it, and we really don't want to look back too far. So again, that's the professional exchanges, right? They have gaps because they close for business hours. And so the 24/7, which I'm coming back to, just has a little bit of a different look to it. And wow, we've been pumping a bit based upon that 12-hour closure, which I did show you. Guys, the alpha momentum pools work, right? You could have longed off of that closure. And yeah, maybe it's only like a tiny baby move, but some of the alts might have gone off or something. But again, like that was a bullish close based upon my momentum strategy, okay? So you can see it proof in work. Again, that was on the 12-hour. This setup right here is the daily. But let's go over to the 12-hour chart again, just to show you what happened right there. We had the 12-hour close. You can see there's 11 and a half hours to the next one. And look at this. Look at this to the dollar precision, guys. To the freaking dollar precision. Boom, right? That long right off of that on the bullishness of that close. You saw it live this entire episode, right? I started the episode before this had closed. I had my momentum lines marked out before the episode even began, and we came back down, popped right off of my momentum level, closed the time frame bullishly, and that was the longing signal. It was a little bit red for a moment, but it did hold that level, and so off we went. And again, guys, like this is what could push us up to that $23,000 area. Okay, so don't fade this chart. It's not bearish yet. There's no bearish structure here. This is very bullish. Okay. Yes, everything is overheated, but you can be overheated for a little while. So just be careful if you're shorting. Be careful. You want to take profits in an uptrend, at resistance. You don't necessarily want to just short an uptrend, right? That doesn't make sense. The time for shorting was at the top of the market, right? At 65K, right? 70K. That was the time for shorting. I don't know all these guys, shorting the bottom of the market or like Il Capo or whatever, telling you to sell everything at the bottom of the market. Are you kidding me? Are you kidding me? We have a double bottom here, basically, okay? I mean, this is a technical double bottom. It's on a slant, but it is a double bottom from my kind of anti-origin channel's perspective. So you guys know that I have the alpha origin channels, and let's go ahead and just throw those on. Let's throw it on log, get a little bit of an auto here, get rid of that 12-hour, and we can see the alpha origin channels. And basically, we would have hypothesized that we could have gotten a nice bottom off of this bloodline. But really, we're talking about cycles on the Bitcoin chart. So if you want to just think about what type of a cycle we're in, well, this was the bottom of the cycle, right? This is the top of the cycle, and now we're putting in another bottom of the cycle. And then in a year or two, we're probably going to have a massive, top cycle. I don't want to make a projection up here, okay? We're going to have to fine tune it at those times. But, because we could also be limited by this yellow line and this white line on the next cycle and put in a bit of an accumulation or maybe even a rising wedge that kind of dips down very low later on. These are just theories, okay? But I would hypothesize that if we do have a nice mid-cycle rally, okay, which we're due for a mid-cycle rally, we've hit the same levels that we hit in COVID. Not sure why that box is up there. Just show the majority of the price action, but COVID actually ended here. Okay, so let's see, let's put that right there. And you can see by my origin channels, this is exactly where we wick down to right here. And so if we did bottom on that same diagonal, there would be a kind of mathematical congruence with this that would allow for a little bit of a pump, a little bit of a bottomness on this on these origin channels. However, this is the uptrend. We also have anti-origin channels which go the other direction in a downtrend. And so what I'm saying is that from an anti-origin channels perspective, from a downtrend perspective, we have had a double bottom on this kind of diagonal, okay? Like going the other direction. So again, guys, like I really wouldn't be too bearish. We are hitting the technical bottom of the last cycle on an origin channel basis, and we are having a double bottom on an anti-origin basis. And I understand this is my own unique way of charting, but these alpha origin channels have just been killing it the entire way, okay? We predicted where we were going to have capitulation. We had capitulation in the exact same spot, okay? We could predict where we would have a deep retracement if we didn't hold this bloodline. We didn't hold the bloodline, and we had a deep retracement literally to where we had it here on these origin channels. So, guys, we really should just really respect what's going on with these origin channels. Respect the origin channels, guys. And even this pump taking us over the 300 EMA. Look at where the 300 EMA was back here when we just kind of started to skyrocket. And so does that suggest if we get above the 300 EMA, are we going to have another skyrocket because this is a deep value to traditional traders and institutions? I don't know, right? This is just a hypothesis, but I'm willing to take a bet on that hypothesis. And anyway, the time to be bearish is over. Guys, what would happen if we had a nice rally, maybe to this white line? Okay, let's say that we break my bloodline, which currently sits at about 20. Let's just call it that $24,000 area, $25,000 area. Let's say we break that bloodline. Okay, we could come all the way up to my white line here even at like 46,000. Okay, why do I think that? Because look, we did that before. We came all the way back up here, right? After this COVID dip, we came all the way back here to the white line, and that would make a lot of sense. Okay, yes, back here we had a little bit of a blow off top, but we also had a blow off top over here. We had a rounded top here, so we could have a stretch goal, even higher, but I don't want to think that way because we don't have the same liquidity in the market that got us to those levels back here. And we also are not doing blow off tops anymore. So we're having institutional rounding. And so I would suggest that we're going to have an institutional rounding before then. And so I just want to think that this is exuberance. This is exuberance. So the yellow line is probably a hard limit around this. It depends how we pump, but like around this $50,000 area is probably a hard limit, and 40,000 would be a really nice stretch goal, right? So somewhere in that neighborhood. Otherwise, I would see a rejection at the bloodline around 25,000, that 23, $25,000 area that we talked about. Okay, guys. So guys, I think the alpha origin channels are going to continue to guide us. These are the best origin channels that we have in crypto YouTube. Okay, there's a lot of different rainbow charts and whatever. This one has been predicting every single hit. Okay, it's not fib based, it's totally based upon my own analysis, and it's just been 100% accurate every step of the way, and it has been leading us, and guiding us to avoid the pitfalls and also to potentially grab those pumps, right? Which we did at the bottom of the market. And of course, we also had a heads up where capitulation could have happened. And so, guys, please, please, please respect the alpha origin channels. Guys, what could happen if we do have a massive pump? Well, the harder you pump, the harder you come down. So I would suggest that maybe like back here, we would make a little bit of a double bottom. We could stop at the bloodline. We could stop down here, on this kind of like COVID bottom, our current bottom right here. Or let's just say that the world goes to a hell in a handbasket. we try to recover from there, we can't, then maybe we end up, we tested this liquidity over here. Maybe we could test this liquidity. Maybe we could even test this liquidity over here again, okay? So, that really is untested. This is really untested. And so let's just say that something really crazy happens in the world or massive, horrible regulation over the next year or two, then maybe we could have this type of pullback. And by the way, I don't think that we would just go to zero, okay? Some people like are trying to scare people and say that you could go to zero. What I'm really talking about when I'm talking about that scary scenario isn't anything too awful. I'm just talking about having the sine wave model play out, okay? And then you can see that's actually a bullish model because then it suggests that we could quickly rise to 90,000, maybe even higher, okay? So keep your eye on the prize, and if we should dip into these lower areas over the next couple years, just understand that there's always ups and downs to be trading, right? And so we could get something like this, right? And this is going to be an epic bull run if we should get that right now. And we could even have another one, even if we dip to these low levels, freak people out, and then, the super pump happens, right? The super pump. Well, that would go hand in hand with freaking people out of their positions so that those institutions can grab it and go, right? So, guys, that's my a little bit of a macro analysis there. I hope you appreciated that. Again, the alpha origin channels have just been the most accurate origin channels in the crypto market, and I've tediously searched for better models, and there simply are not any. Okay, there are some. I just saw one that uses on-chain data mixed with traditional analysis, not TA, but like back end numbers, and I'm examining that right now because I think that it could buttress this model and that they could dovetail together with great synergy. And so I am looking at improving this model as we go along, but for right now, it's showing us as we break through this 300 EMA. And as we come up to challenge this bloodline, should we break that bloodline above 25,000, we are going to potentially have an epic squeeze to $45,000 perhaps. Okay? So everyone else is super bearish. I'm telling you, like, we're watching this very closely, and the alpha origin channels led the way. They told us what to do. And let me just zoom in here because some of you guys may not believe me. And by the way, I'm on the weekly right now, okay? And this is what it looks like on the weekly. Look at that freaking pin perfect precision, okay? Look at that look at that precision. Look at this precision. Look at this freaking precision right here, guys. Look at this precision, okay? We're going to pay attention to what my alpha origin channels are saying because they have been telling you the truth when all these freaking influencers and all these YouTubers and all these gurus and all these Twitter handles have been just spouting nonsense like Il Capo telling you to sell everything, right? At probably the best support that this market has had on this entire cycle. We just want to watch out. Just want to watch out. Yes, Jerome Powell. Yes, the Bank of Japan. Yes, interest rates, recession. Yes, profit over earnings reports for a potential global recession, and it's China, right, invading Taiwan, Russia dropping a nuclear weapon. All that stuff can, in fact, have us drop deeper. But short of those things actually happening and them actually being in the news, short of those black swan events actually happening, we have the potential to go on a run. And then maybe those things happen later. Maybe that's what takes us to on a dive, which then resets the chart 100%, and we just go on an epic run, and it's only up only after that. Okay? Don't be a perma bear. Don't be a perma bull, right? And for the love of God, take your profit, okay, regularly. Pay yourself for the work that you do. Make sure you're earning at least minimum wage. Trading, pay yourself whenever you get a bullish pump a little bit. You can always buy back on a retrace at a discount. so that you're having some money in your pocket. You're using the rest of the money to buy back in on a pullback if you're still bullish, right? Not financial advice. I'm not telling you to do that. But make sure that you pay yourself. You don't have to just hold on to these coins. You have to be loyal to these coins. They're not going to be loyal to you. Put food on your table, okay? Guys, this is how we're going to make money, okay? This is how we're going to make money. And if this chart just turns around here, or should something wonderful happen, then you're going to want to have paid yourself along the way, because these things always, always, always come back, right? They always come back. Always comes back. Always comes back. Always comes back, okay? You don't want to be the guy who's buying up here and then it comes all the way down here. And then this is the chance of a lifetime. And you have coins, you don't have money, right? Worthless coins, right? That are down like 90%, okay? What could also cause this? A crash in the stock market, right? Just an epic crash, right? Depression level kind of crash in the stock market could cause this. We can talk about that a little bit more later, okay? Let's see. Let's get off of these alpha origin channels because I just wanted to talk about that technical double bottom. And let me show you a projection that I'm working on, okay? Let's take off these EMAs. Oops, I put more on. Let's see. There we go. Let's take off those EMAs. Let's throw on a projection that I'm working on. This is my thoughts, okay, based upon the alpha origin channels. And by the way, this arrow down here, this is open-ended, okay? Like it could stop at any one of these green points and then bounce. This is the bullish scenario where everything goes well in the world. The recession isn't as bad as we thought. Inflation is under control. This is the very deep retracement. Something got out of control. Something broke in the financial system. And this is the freak everyone out, nuclear war, World War III, whatever scenario that could bring us down here to retest, ultimate fear levels, okay? And retest the support of the market at ultimate fear, okay, where people just freak out. But short of that, I would say that, maybe worst case, we retest the pre-COVID highs, right? This is the pre-COVID highs. That was the normal market before all the stimulus money and all of the unlimited money printing and all of the 0% interest rates, just to like flood the money with dollars, flood the world with dollars, before dollars became essentially worthless because they put so much out there during COVID and shut everything down, right? We might just retest the world, right? The world economy at those levels. And so this would be that kind of moderate case. We just want to get certainty before we go on the next step. And we will have also reset this whole cycle, right? Based upon the alpha origin channels model. But if everything's going great, maybe that's not necessary. We don't always have a deep pullback, right? Maybe we just have a shallow pullback and we don't even get as low as the previous low, but this is going to be a technical double bottom on an uptrend. And then off of that double bottom, boom, right, guys, into something maybe like 90K at most. Because we're going to be rounding the tops even more, diminishing returns even more on this aging asset. It's no longer a spring chicken. It can't do these blow off tops. It's starting to round, starting to, diminish returns. And so maybe it's just even 60, right? Like, let's say we have this type of a movement here, and then we come back, get a technical double bottom on a bullish side, and then pump all the way up to this yellow line, maybe the white line, and then we put in an accumulation pattern here. I'll show you what that looks like. All right, so we get a little bit of a run, come back for a double bottom, get the same height, and then maybe we spend another half year or whatever trying to battle that stuff and get above there. But this will be an accumulation pattern. Pow, right? And eventually it might take off. Could be a fake out to the downside before we take off, right? Something like that. That's an accumulation triangle. Looks pretty nice. So these are my thoughts. Let's take off the alpha origin channel so you get a clearer picture of my projection here, and then let's put it down on the daily. That's on the weekly there. So let's just see what that would look like. Take take a good picture of my projection here, and just let's see if that works out or not. Again, guys, this target isn't a real target. We have some CME gaps and stuff down here, so that's just why I'm putting that. Just maybe the market wants to retest these kind of freak out levels. If something crazy happens in the world, just ignore this one, okay? We will retrace somewhere. Either it's going to be, higher than our previous low, or in the middle here, or this again, like, well, we already saw that, so I won't repeat myself. But I think we could do something like this. Maybe not retrace as deeply as people think, and just continue to pump and just continue to pump and just go. Maybe 40K, maybe 46K, okay? So in 3 months, half a year, let's take a look at that. What do I think that we could probably tag? Maybe this 46,500. I think that's probably the upper limit, okay? I don't think that we could get higher than that in this cycle. I think that that's the maximum that I would suggest. And then we have this kind of intermediate level. And then, of course, we have that $25,000 area, right? So 3 areas up here. And then again, like with the alpha origin channels, 3 areas should we retrace, right? A little bit of a higher low, very bullish, but, maybe we don't have as much energy. Deep retracement, huge amount of energy built up, just going to take longer, but we're going to get a really nice run out of that. Best values of your life. And then freak everyone out. Probably you're going to sell. Probably I'm going to freak out, right? Maybe a lot of us don't even have money because something broke in the financial system. Okay. Like this was COVID, everything shut down. Some people just didn't have income. They couldn't buy. Okay. Only the guys who got the 0% interest loans from the banks were able to buy, right? A lot of those people, or the stimmies, right? And so something like that could happen. And this would be just as epic as this was, guys, right? Maybe the market makers, they just want to have that happen. Maybe the world economy just goes crazy. Maybe it's not a conspiracy. Maybe it's just how cycles work, right? All of that stuff. But this is what I'm looking at. Okay, if you want my macro kind of projection. And how can I think this way? We have a monthly drive of bullish divergence building up. Okay, let's go to the monthly. Let's go to the monthly. Look at this. Look at this beautiful hidden bullish divergence building up right as we're breaking out from this monthly downtrend on the RSI, getting a technical double bottom here on a bullish divergence that spans, wow, right? It spans quite a long time, almost 3 years. This is a 3 years long hidden bullish divergence. When did we get that last run? In 2019, that mid-cycle run? Look at this. Look at this. 2016 to 2019, 3 years hidden bullish divergence off of the monthly chart. This is the monthly chart, guys. We're doing it again. What happened back here? We blew through the EMA. We have the EMA up here. What's going to happen this time? You think we're going to get rejected off of that with this 3-year long hidden bullish divergence? You think we're going to get rejected off of that? Look at this. Look, we had a monthly bearish divergence right here, and we freaking plummeted. If we have a bullish divergence on the monthly, what do you think is going to happen? Pop. Maybe. Not financial advice. Do you think my model is realistic or unrealistic? What happened after that mid-cycle rally? Huge crash. Huge crash. Again, this endpoint is open-ended. There's 3 levels in between. Okay. Just ignore this part. Something to think about, okay? As everyone is shorting this market, something to think about. I hope I'm providing good analysis for you guys. I'm very much struggling to get to 1,000 users. YouTube has a time limit on what you can do with your YouTube, and you don't get professional controls unless you have 1,000 people. Please like and subscribe. Please forward, this YouTube video to your friends and ask them to subscribe. I need some help to build up this channel. It's been a year, guys. It's been a year. And so some of my credits that I've been building up with YouTube, they're going to start expiring, and they're going to ask me to like build up that, more. Like they give you a year to do something, and then like the months that pass start expiring, and you have to build up again. And so please, I need your help to build this channel. I know a lot of you are my friends, so please, please, please try to help me out. I hope that I'm providing you some type of value, whereas others have been leading you in the wrong direction at the top of the market, and I was saving people's butts, and now people are perhaps leading you in the wrong direction again, and I'm trying to save butts again. And I'm not saying we're going to 46. I'm saying this is the upper limit. This is the upper limit that I could see on this move, okay? And that I would personally project this type of a pattern to play out. Should we get that upper limit, I would expect something like this to play out. And it could give you very little time to build your positions. What does this look like? An inverted head and shoulders, right? What does this look like? 1, 2, 3, 4, 5. A 5 Elliott wave to the upside, right? A huge impulse to the upside. And then maybe we get something corrective, right? A, B, C. Maybe a higher low, or maybe the world freaks out. Who knows? Okay. But the guys, just going back to our daily chart, we do want to take a look at the alpha momentum pool just one last time. And again, go to that projection. We are super low on these charts, guys. There's still a lot of potential. You didn't miss anything, okay? Yes, the move could end. We could just flop over and die. Yes, I know that. Either here or at 23,000, 25,000. If we fail those moves, yes, we're probably going to retest our lows, maybe even go lower. If Jerome Powell on February 1st decides to kill us with like 50 basis points raise or 75 basis points raise instead of 25 or nothing. And even if we have 25 basis points, the stock market is already positioned to dump. So the stock market itself could take us down, okay? But if everything goes okay and we hold above 19,000, we hold above 19,300-ish, right? You see this bottom over here, right? Especially if we hold above 19,500-ish, what are we going to do? We're going to basically be printing an inverted head and shoulders. All we need to do is take out the neckline after that. So that could even be when we get to 23 or 25. We're going to have a very bottomy structure if that happens because our EMAs are going to be having more time to curve upward. So we're going to get into massive squeeze plays to the upside. How can I be bearish under those conditions? We're not there yet. We haven't proven anything except that we can pump. But on the CME chart, I proved to you we made a higher high already, at least higher than this area over here. On the CME, professional exchanges, we made a higher high. We made a higher low here. We have the possibility of closing this month with a 3-year monthly bullish divergence, hidden bullish divergence. I can't be a perma bear, right? And I can't endorse shorting under those conditions. Just wait and see, guys. Okay, wait and see. It's only two. If you just want to wait 2 more weeks to figure it out and hear what Jerome Powell says on the first, that's a perfectly okay policy as well. You don't have to catch the bottom. This was the bottom level. Yes, I caught it. Yes, Alpha Commission caught the bottom, the pico freaking bottom of this level here. You don't have to catch. You don't have to catch the bottoms. You got to catch the trend, right? You got to catch the trend. So it's okay to wait for the trend to be confirmed, right? So we've been validated. We've been validated off of our thesis that that was a potential bottom, but we haven't got a confirmation yet. Just wait. It's okay if you're waiting for the confirmation. You can be a conservative trader. You can protect your capital. You can protect your money. In a macro bearish economy and a macro downtrend, protect your capital. You don't have to listen to YouTubers. Forget YouTubers. Okay? I'm a YouTuber. Just forget YouTubers. You have to listen to Twitter handles. You don't have to listen to anything but your home economics, okay? Make sure you're paying your rent, putting food on the table. Don't be loyal to these coins. Again, they're not going to be loyal to you. They'll screw you over every chance that they get, okay? So take your profit regularly. Every time we have a massive pump, you can always get back in on a pullback, okay? Even if it's a shallow pullback, you can get back in. Pay yourself a little as we go. You never know what can happen in the world, okay? Don't be a perma bear, don't be a perma bull, just be a clever little alpha monkey. Guys, I am going to just show you the stock market for just a couple minutes, just to show you what we have on there. So we do have the S&P 500. I believe I have these things marked out. Right now we're having a bit of a pullback to the 200, sort of like what's going on Bitcoin. Higher low, nice pump, didn't break this previous high, but we do have our price action sitting on the 200 right now. And I think markets aren't open. I'm recording this at 5 a.m. since 4 a.m. pretty much. And let's see here. Inverse head and shoulders. Boom. We break this neckline, okay? We break this neckline around 4,080. Especially if we get above this wick right here at 4,180, okay? Because this could be a fake out. Anything up to 4,180 could be a total fake out. Key levels we're going to have to watch out for. Number one, I really like this level right here of this perhaps front runnable move on this inverted head and shoulders. Okay, so just 4,080 is something I'm looking for to put price action above that one. That could suggest a potential bullishness to the upside. Then 4,180. This is the S&P 500 mini futures. ES1 exclamation point, okay? And then over here we have 4,327. Anyway, we get price action in this area. We're probably having a measured move up to 4,576 in my mind. This could be what takes Bitcoin on that epic bull run. Okay? Not a new all-time high on Bitcoin, but it could take Bitcoin on a epic run. Okay? You see? That's my logic here, guys. Analogical thinking. Failing this, should this be a failed head and shoulders, the measured move, the rejection target is going to be 3,335, which is what? Da, 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 the previous, the all-time high prior to COVID. Okay, we might test the prior high, the COVID prior high. That's the right way to say it. Because we know that that's a price that the market can support before all that crazy stimulus, all that artificial economy. Okay, before all the lockdowns, before all the 0% loans, before all the $1 trillion of just unlimited money printing. We know the economy can support this level. And so maybe Maybe we just want to retest that. Should we lose that, just like what I was telling you with Bitcoin, we could have some freaking weird depression level crash that could test the freakout zone on this chart. Okay, but what do we have here? We have an inverted head and shoulders that can potentially take us to the upside. Okay, what else do we have? A broadening descending wedge with the same measured move. But watch out. All right, let's put this on, get this on regular linear chart, not log. But watch out. If we fail to hold this, the trend line is all the way down here at the COVID lows. Look at that. Look at that. Okay, at the COVID lows. And of course, if we look at our downtrend, you can just imagine we could capitulate all the way down here, maybe pump up here, capitulate again, bounce all the way down before we break out of this thing, should we explore this area. We don't have to explore any of these levels, okay? I want to show you what else we have going on. We do have support in this area. Most people probably wouldn't see this, but we have a channel going through here. And look, we could potentially drop one channel lower where this one did, but that would be in that $3,200 to $3,000 area. That could also check out the liquidity in that kind of virus era. Maybe we hold on to this channel and just do a double top or a higher low or something, and then come back down and test that stuff, and then go on our way. Okay, I don't want to just terrify you guys with the crazy stuff. Yes, it is possible to have something crazy happen. It's happened before. We have a downtrend that could even lead us down here. Okay, like really serious, crazy numbers. We have a lot of stuff breaking in the world. Like the Bank of Japan it's freaking out right now, guys. Okay? Taiwan could be invaded, Ukraine's being invaded, there could be World War III, there could be nuclear war, there could be a banking crisis, all of this stuff at the same time. Inflation could come back because of that, because oil and food would get super expensive. And then interest rates would have to skyrocket and the market would plunge down. Plus, we'd be already in a recession, right? They may just not have enough money to be printing anymore. We could have, loss of confidence in the dollar if we print too much money. If the Fed comes in to save us every time, we could have loss of confidence in the dollar. The Fed can't just save us every time, or people are going to abuse that system. That's what caused this bubble that could crash and take us to severe lows. We hit our measured move for the rising wedge. We could continue to go forward. Measured move, hit. We don't have to stop here. We're free to do whatever now, okay? Just we are right at that downtrend. Not counting that wick. Some of the indices are not breaking out yet, okay? This is just the futures. Could be a fake out, could break all the way down. Take out these lows, 37.86, 35.80. Probably Bitcoin's going all the way down with this thing, okay? All right, guys, I think I'm going to end it there. Just wanted to do a little bit of a S&P 500 analysis as a little bit of a bonus. What else do we have going on? The VIX is still super low. Good for trading area. Trade while you can, right? USDT coming down. What's that mean? People are putting money into altcoins, putting money into Bitcoin. US dollar continuing to break down. Looks good. Looks good. Continuing to break down. It's good for trading. Could get a little bit of bouncy zone here. Could have a couple hard days, maybe a couple weeks of difficulty. But if this continues, if this retests bearishly and continues to break down, Bitcoin could go on an epic run. Okay, then we start to look at the support down here, right? It's kind of 96 area. Yeah. This was a lot of support up here though, so if we do bounce around 101, don't be too surprised, okay? Bitcoin may not be able to go as far as we think if the dollar rebounds at some point. Just be aware of that. These could also just be pullback points on the Bitcoin chart. I am over an hour. I did kind of drag this on, but I wanted to get a nice macro analysis out there. Guys, I hope that you enjoyed your holiday yesterday and that you're having a wonderful week. Please stay safe. We had a massive pump on the Bitcoin chart. Take a little bit of profit. It never hurts to take a little bit of profit, guys. Stay safe. As you're out for the day, stay safe and happy trading.